All right, hey everybody. I'm just making sure we're live. Looks like Zap stream is up. People should be getting a YouTube announcement. I'm doing a show here quickly. It's going to be a short episode, without any fanfare. So I didn't announce to anybody. I just wanted to update people. People have been asking how my thoughts have changed. I since I started doing these videos, I feel sort of compelled to update people, and that actually sort of stresses me out because the last episode that most people watched, I did an interview with Nick Bhatia, and at the end of that episode, I gave some updated thoughts. But it's clear that a lot of people didn't really watch that far towards the end. Um, Let me hold on here. Okay, hey R, yo, what's up, man? And sorry, here I got to get this up here too. Zap stream is up. Hey, buddy. Okay. Zap stream, I'm going to pay attention to you if anybody pops in. Probably not because I didn't announce it to anybody, and that's fine. Okay, so but I'll try to keep an eye on it. So I just did a mastermind discussion, the quarterly one, last night with Preston Pish and Joe Carlosari and Hodl, American Hodl. It was great, really fun conversation. It's not going to be released. So I did it last night, which was March 13th. It's going to be released, I believe, this coming Tuesday, which is the 18th of March. So I just want to sort of expand on what we talked about because I think it's important, and that little delay, it can be hard on some people. So here's the way I'm thinking about what has been going on, because it's helpful for me to sort of think about things, which I spend a lot of time thinking about what the economy is doing. I've been listening to a ton of Scott Bessent interviews to get his take on everything, and been listening to Trump, but mostly Scott Bessent. And I think that it's very enlightening to do so, and then to watch the effects on the market. So here's what I think. Here's an analogy. The analogy of what's going on with the markets today in the US is like we've basically the markets are sort of, hang on a second. I gotta just close. The markets are like a teenager who's had free access to a credit card, to their daddy's credit card. And daddy just took the credit card away and said, you know what? You need to actually go out and get a real job. We're not just going to give you a free ride anymore. That's how I view the U.S. markets. They're having a tantrum. So we're in that awkward phase where the fiscal stimulus and the unlimited monetary stimulus is being removed, and now they're being forced to go out and get a real job. So I think what the plan is, and Bessent is sort of the main spokesperson, and I think the main architect. And by the way, I see people on YouTube making fun of Bessent like he's stupid. He is not stupid, you guys. He's a multi-billion-dollar hedge fund manager who's been who's been in the markets for over 3 decades, I think like 35 years or so. He knows what he's doing. Okay, so he's not stupid. And they're doing all of this on purpose. They're basically resetting the markets by taking away the fiscal stimulus, so taking away the credit card, and they're reprivatizing the market. So they're taking away regulations. I'm telling you, as a small business owner, the regulatory burden is awful for small business owners in America. The primary driver of the US economy is small businesses, and small business owners have been getting absolutely harassed by the regulators, and it peaked basically in like 2023, 2024. It's been terrible. And so having less regulations, having to deal with less compliance is actually a good thing. We've gotten way overboard on the amount of regulations and compliances that good people who are trying to just run their simple businesses for their families and to help serve their communities, they've been getting harassed. And so I'm very excited about that. I literally shut down half of my business, my RIA, because of dealing with compliance issues, arguing with regulators about what's appropriate, how to run my how to manage my portfolios. Literally arguing with people about it, who don't know how to manage money, but they regulate people like me. So anyways, That's a personal issue, but I think that's a good thing. What we talked about on Preston's show last night, one of the things is they've been front loading the bad news, and taking away the credit cards, so taking away all of the payments, the free fiscal stimulus, taking that away. It's painful, and so we're in that tantrum phase right now, and it's been rough. But I'm here to tell you, so that's where we are, okay? And Besant keeps talking about reprivatizing the U.S. economy. So what we are going to see, and I believe, and that's kind of the point of this video, what I think we are seeing now are the beginnings of new strength in the economy in the US. And we've already had strength, as I've mentioned in previous videos, in the international markets. So China, Europe, after a long period of malaise, they actually look pretty good. And then on top of all of that, the central banks are now all doing easing to some extent. So still not here in the US, but in China, in the EU, they are lowering rates. US M2 monetary supply is increasing around the world. Things are looking good. So we've reached a point, I think, of peak bearishness. The fear and greed indices were at like record lows, like shockingly low. Conditions from a technical perspective in the markets have been massively oversold. Like we're talking like the COVID lows. You guys remember March of 2020 when everyone was panicking and literally everyone was just hitting the sell button on everything? That's how low the technical indicators have gotten. They're at that level of fear, and it's just not appropriate. The market, even though it's taken a hit, and we've had these tantrums in the U.S. markets, the economy is actually looking pretty good and it's strong. And I think that the economic surprises that have been surprising to the downside for the last 2 months are going to start surprising to the upside going forward. And I do think, by the way, that this is a great example of what happens with the delayed effects of a strong dollar. So we talk about the dollar wrecking ball. Most people understand that concept, and I won't get into it today because we've talked about it before. The dollar spiked higher basically throughout the fourth quarter of 2024, and it peaked on, let me share my screen with you guys here. Share. Okay, so I think you guys can see that now. And I'm going to do this so you can see my arrow right. I've been doing that wrong before. Okay, so the dollar, this is the Dixie. So the dollar relative to a basket of other currencies peaked here, which was on January 13th, I believe. Let me get that. Yep, January 13th of 2025. The effects of a strong dollar don't take hold right away. There's usually about a 2-month delay, sometimes sort of a 2 to 3 month, but I like to use about a 2-month delay. So things were actually doing fine in the markets, in the US markets, for some time after this because the delayed effects had not yet hit. January 13th, ironically, it's now March 14th. So almost exactly 2 months later, the dollar has been going almost straight down since that time, as you can see on this chart. Oh, sorry, I'm doing my arrow wrong again. So from here we are, now it's doing it right. January 13th, down until today. 2 months of delayed effects. You'll see now, if you look down here at the RSI, that's the relative strength index. We hit lows, right? So these are oversold lows. The other thing you should notice, and this is what I talk about all the time, is people don't, for some reason, don't correlate these two things, but they definitely should. This one down here, this lower blue line is global M2. I call it the poor man's version of global M2. There are way better methods to do this, but this generally shows the direction correctly. Like Michael Howell of Cross Border Capital, Darius Dale, these guys do better models for global M2, but this poor man's version on TradingView gives you the general direction almost to a T with these guys. So I like this. For me as a fund manager, this is more than adequate. But what you'll notice and what I've talked about is, see how the dollar started booming here at the end of September. That's where it bottomed and then peaked. And I said, watch what's going to happen is global M2 will pivot and roll lower, and that will be that will bring pain onto risk assets into Bitcoin in time. And then I said and then everybody started freaking out about global M2 is going lower. I thought you said it was going higher. It is going to go higher, and we're not going to see that reflected until the dollar peaks, until the dollar strength hits its peak, which it did back on January 13th. And then it's been rolling over. And you'll notice at exactly on cue, global M2 pivoted and is moving higher again, right? So these are all interrelated. That's the huge take-home point, number one. The next take-home point is that we're basically at the end now of this 2-month period of pain. So we had that intense dollar strength that affected global M2. Now we've had this weakness. 2 months later is about when we should expect to see a bottom in the most liquidity sensitive assets. And the most liquidity sensitive asset in the world is Bitcoin, right? So everybody knows this. So why do I think that we've reached local bottoms in Bitcoin? Because exactly of this. I am bullish. I think that these lows, the hammers, the tantrums that the market was experienced, the hammer blows to the U.S. economy and to U.S. Assets like the Mag 7 and other, other U.S. kind of stocks, they're going to keep coming, but I think that we're going to start seeing surprises to the upside now in the economy. And so everybody is very negative. Everybody is bearish. Fear and greed indices are low, like off the charts low. That is a great contrarian indicator that we're very close at or near a bottom. Could we muddle along for another couple of weeks? Sure. And here, let me pull up Bitcoin here so you guys can see it. I mean, Bitcoin's ripping today. I'm putting this chart back up. I think you guys can see that good. Let me get over to here. Okay, here's Bitcoin. These are daily candles. I drew this line and we talked about this before, right? And I showed you guys here was the wedge of justice right here. And I said that, the Bollinger Bands are getting very narrow right here, and that we're going to have a breakout. Usually when you have a pennant like this, the pennant usually oftentimes will break out actually lower when you have that pent up volatility. So we had volatility suddenly explode. The price broke out down to the downside on February 24th out of this pennant. And then the reason, so there's nothing magical about these lines. I call them magical lines that I draw on the charts, you guys. But what they do for me is they tell a story. And what the story is, and that's the narrative is important. You can see back here. So here in August, early August, August 5th was basically the yen carry trade unwind. And then in early September, we had another scare in the markets and every risk assets dipped, as did Bitcoin. But the important thing is this line, what it's talking about. It's talking about a series of higher lows. So higher, 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 and then boom, Bitcoin explodes higher. This is why I drew the line for this series here. So you can't really see it very well here, but right here, and this was that was February 28th. So on February 28th, and before this line got transgressed, I drew this green line and I said, this is the line I'll be watching because I want to see a continued series of higher lows. That's a sign of strength. That's a sign when you're consolidating but getting these higher lows. That's actually very bullish for the next move. So we had it here, we transgressed it here. That doesn't bother me, right? There's nothing magical about the line, but it basically hung on this line here on these days, which we're back on March 10th and 11th. That's totally fine, right? I don't care if it transgresses a little bit. I want to know, is it still telling the same story? So the story continues, right? We're having a nice spike in Bitcoin today. It's up to 85. I think that what this is showing is that there is tremendous strength in Bitcoin. This consolidation is for real. And if I had to guess based on what we talked about with the dollar, right? The 2-month delay is basically over. We hit these huge oversold levels here, which I demarcated for you guys in green bars, yellow bars. Yellow bars is like oversold. Green bars are very oversold. That's the time that it's great to buy. And then it even dipped lower. That's actually fantastic. Most people freak out about that, but I'm like, it's great. It's if you thought this was, Bitcoin was great here at 83,000, then it's even better if it dips below 80,000, right? So that's been fantastic in my fund. I was taking advantage of these sale prices. And then for me, the most important thing is this divergence here. So looking down below on the chart again, global M2, which basically bottomed in mid-January finally, and then started raising higher, is now at new all-time highs. Given the 2-month delay, again, the delayed effect and why that happens, I'm not quite sure. It can be sort of 2 to 3 months, but somewhere in there. I posted on Noster days ago, last week maybe, that I think Bitcoin will be based on global M2, which a lot of people still don't believe, which I think is crazy. But people got to do what they got to do. We should be seeing new all-time highs in the price of Bitcoin before the end of May. That'll be a good test to see if this global liquidity stuff actually works, and I think it does. So hopefully that makes sense. I'm very bullish. I've been buying. I hope people aren't selling. This is me as a degenerate hedge fund manager and as a trader. I strongly recommend to everybody that you do not trade Bitcoin. Bitcoin is savings. You don't trade your savings account, just dollar cost average in it. Use it as savings. Spend it if you need it. That's what savings are for. If you can hold it for as long as possible, that will benefit you and your family greatly. That's that. Let me just look at some stuff. A couple more things I wanted to talk about. Lagging indicators versus leading indicators. The Federal Reserve looks at lagging indicators. So people are talking about unemployment. Unemployment tends to it lags the economy, basically, like the ISM, manufacturing, services, those kind of thing, tends to lag by about 6 months. So we're seeing a little bit of a spike in unemployment, and I actually think that that could go a little bit higher, but I don't think it goes much higher. Inflation, trueflation, has come down to here, let me just pull it up so you guys can see it. Trueflation. If you guys don't know this chart or this page, I strongly recommend that you get to know it because it's awesome. Let me go to Riverside. Sorry guys, it's I'm not super fancy. Let me share something else here. Screen. There it is. Okay, sorry for the little delay, everybody. So this is for people who are just listening, trueflation, I think, is a more accurate picture of what's going on in the world of inflation. CPI, as most people know, I think it's just sort of safe to say it's rigged. It's not for like a conspiracy theory. It's literally the government changes the metrics year after year to make inflation look like less than it is. Trueflation peaked at 11.57% in June of 2022. I believe CPI peaked that same month at 9.1%. But check out what's happened here, and let me cone down a little bit. So in the last year, inflation since the end of February has literally just fallen off a cliff from 2.3% down to a low of 1.3%. And today it's sitting at 1.5%. Why is that important? Because this will be reflected. So this front runs the CPI to some degree. So I expect CPI next month. So this reading apparently surprised some people, which I think is funny, to the downside, like 2.81% or something like that. I think next month is also going to surprise people to the downside. Why is that important? Because that helps the Federal Reserve. They can look, they're like, well, unemployment's creeping higher. Inflation is no longer a problem. It's very, very low. That gives them room to actually lower the federal funds rate, which has big effects on the economy on adjustable rate debt. And we can talk about that later too. So why does that matter? Because you can get the Federal Reserve easing also. So most of the world's central banks have already started easing. The Federal Reserve will be the last one to do so, and I think they are going to be compelled to do so shortly, and that's a good thing. I've also said that I think this cycle for Bitcoin is very much like the 2016-2017 cycle. And what that says to me is that most of the world's liquidity that's going to go into Bitcoin and drive the price higher will actually come from outside the US, China, the European Union, other countries, Japan possibly. We'll have to see. We'll wait and see. But I'm very encouraged by what I see so far, and I think it's playing out. I think the dollar will continue to zigzag, but zigzag lower throughout 2025, similar to 2017. And that will be a boon to risk assets in general, and it will definitely be good for Bitcoin, for the price of Bitcoin. Couple more things, leading indicators that I wanted to talk about. So we talked about lagging indicators, leading indicators, overtime hours, temp workers in the US. are jacking higher, like off the charts higher, that is a leading indicator that companies don't have enough workers and need to do a lot more hiring because business is picking up. That is a good sign for the economy. That's good. CEO confidence dipped a little bit last month, and then the more recent reading just came out, ripped higher. CEOs of real companies are bullish on what's coming. They're bullish on the anti-regulation, on the tax cuts that are coming, and they should be. Because of that, they're going to be hiring some more. We won't see that reflected in the unemployment readings, though, for like another 6 months or so. So don't be fooled by unemployment. That's a lagging indicator, not a leading indicator. Investments move towards where the future is going. They skate where the puck is going, not to where the puck was 6 months ago. You got to not get fooled by that stuff and always tease those things out. So everything to me, despite the tantrum that we've just been through, which was real and lasted for a couple months, I think we're near the bottom. I think things look bullish going forward. I think things look especially bullish for Bitcoin. Spoiler alert from the Preston show last night, this mastermind discussion, all four of us are bullish going forward. All four of us think that the bull market hasn't even started yet, but we're probably just about to get started. And so I hope you're not sitting on the sidelines. You do you, right? I'm just telling you what I do and what I'm thinking about. I make mistakes. Thankfully, I have a trading system that if I guess my predictions wrong in the short term, my trading system keeps me in trades and keeps me out of trades, those kind of things. I hope you develop a system like that too for yourself. I think, again, for Bitcoiners, you should not be traders, especially with Bitcoin. Just hold it, buy it, hold it, and the price will take care of itself over time. That's literally all you have to do. Bitcoin is savings. It's just superior savings technology. That's the end of my little mini presentation. I just wanted to go through questions. Hey, everybody, I won't go through blah, blah, blah. Noster sucks. Total circle jerk. Okay, Bruno, good comment. Thomas, why did the drop to 77 not get caught by the drop to 77,000? I think. Are you talking for Bitcoin? That was an oversold metric, but which I take it as a contrarian indicator to be a great time to buy. Do I anticipate, New Brave World asked, do I anticipate global M2 to keep rising this year? Absolutely, and I think it's going to start rising faster going forward. I talked, Colin, about why I changed from bearish to bullish. I think the tantrum is almost over. I think the teenager who had the credit card taken away had just got a job, and they're going to start working, and the economy is going to start revving up in the U.S. It will be bullish, and that will drive future returns. It drives earnings higher for stocks. That helps drive the stock market fundamentally. And then as M2 expands, that has multiple expansion. So earnings expansion and then multiple expansion. When I say multiples, I mean price to earnings, price to stocks. Those things increase as global M2 increases. Two separate things, but they're usually sort of interrelated. Any news on the new holding bit? I don't know that, Will. Sorry. Thanks, Cosmic, for the thanks for the nice compliment. See what happens. Close the border. Yeah. Martin, thank you. Welcome. Let's go, Chad. Talking macro. Preston, yeah, Preston, he's not like me, right? He actually does a nice job with his stuff and likes to put out quality stuff. I just put out this hack job stuff. It's just my personality. I don't want to take the time to do it. I have too much stuff to do. I just honestly have these thoughts and I want to share them with people. And the sooner I can get them out, the better. Thoughts on Bitcoin EFT? You mean ETFs? I assume exchange traded funds inside IRAs. I think that's reasonable. I think if you don't have access to actual spot Bitcoin in an IRA, that spot ETFs are a good idea. You have to pay a little bit of a fee, so look for low fees. My only encouragement for that would be to get maybe more than one. Base it off of fees, but also base it off of who the custodian is. Most of the ETFs use Coinbase. I'm not a huge fan of Coinbase. although I think the assets are probably safe. Fidelity has a ETF and they custody themselves. So the way I like to think about it is I like to split it up between custodians. So maybe consider Fidelity as a custodian, consider Coinbase as a custodian, would be my thoughts. How does potential peace between Russia, Ukraine affect your overall outlook, Andy? That's part of where I think we're going to start seeing news surprise to the upside. So everything has been very bearish, tainted bearish. I think we're going to start seeing some good news coming. I think we're going to start seeing peace deals. I think tariffs are going to become clearer and actually surprise to the upside with their results. I think taxes are going to start becoming more in the public sphere, and that will be very bullish too, right? It's hard to argue that it's bullish to reduce everybody's taxes unless you don't pay taxes. And then just more deregulation, which is also bullish. So I think generally the news is going to be bullish going forward. Do I have thoughts about MicroStrategy and their preferred stock at the market offering? Not really. I think I have no change with MicroStrategy. I don't like promoting it. Because there are other risks to trusting, MicroStrategy, custodial risks, CEO risk, right? Something could happen to Saylor. They could get hacked. They could lose. There are lots of things that you deal with MicroStrategy that you don't deal with Bitcoin. That being said, I've said for several years now that I think the only stock that can actually outperform Bitcoin over the long run, at least until about 2034 or so, is MicroStrategy. And now the copycats. There are a few copycats that I think could possibly outperform Bitcoin because they use intelligent leverage, right? If you can borrow money from the public markets for free and buy Bitcoin, it's hard not to do well with that strategy. So I think they will continue to do well, even though I still think the vast majority of people should simply buy Bitcoin, put it in cold storage, and be safe with it. What about sell in May and run away this year? We may have some mild summer effects for sure. But for me, it always depends on what happens until then. So if we have a rip higher from, say, mid-March, like right now, through the end of May, then I'm like, yeah, we'll probably have a pullback in June, July. But I'm not going to say that now. It depends what happens leading up until May. L. Colin, thanks. Appreciate you, Colin. Thanks, Will. Bruno, thanks. Thomas, do you support the U.S. buying and holding Bitcoin? And do you think the U.S. will buy Bitcoin this year? I think Bitcoin is for everybody. Okay, so if you guys have been listening to me long enough, you know I am not a fan of nation state governments and all of the power they wield. I love Bitcoin because whoever has the creation and control of money has the power. And the US has had the creation and control of the world's money basically since the end of World War II. And especially since we got off the gold standard in 71, thanks to Nixon, which I'm not obviously I don't support. I think that Bitcoin over time will downsize and defund the federal government, and not just the US government, but all governments around the world. And I think that is super bullish for humanity, right? Huge nation states governments with monopolistic control and authority over their people is not bullish for humanity, it's bearish. What's happening in Europe is disgraceful, and they need to be defunded. The European Union, I think, should be defunded. So the US, even though most people in the US federal government are unworthy of Bitcoin, they've made good choices. So this SBR, and we talked about this last night on the show with Preston, which will be released next Tuesday. The way the executive order was written is very bullish. I was surprised pleasantly by how pro Bitcoin it was and how and I described this. The SBR, the Strategic Bitcoin Reserve, has a one-way valve into the SBR. So you can put Bitcoin into it, but you can't take it out. The crypto stockpile, it is actually really funny to me. It has a one-way valve only out. So you can hold it in there, crypto, if you want to, or you can sell the crypto out of it, but you can't add to it. So, I think it sort of put crypto in its place, which it doesn't really have a place, nowhere near Bitcoin, obviously. I think that it is smart for anyone, whether an individual or family or business or government, to hold Bitcoin. And so while I don't really want the federal government to prosper, I would rather have our federal government prosper, than say an enemy's federal government to prosper. But I think Bitcoin is for everyone, including our enemies. So I think that all nation states are going to follow the U.S.'s lead and are going to start buying Bitcoin and having it as a strategic reserve. If they don't, they will become obsolete. It's just how the world is going to work going forward. I've been saying that for probably 5 years. Whether you're a business or a government, if you don't have a Bitcoin strategy, you will become obsolete in 10 to 20 years. So you better start moving. And the U.S. just really sped up the game theory recently. So do I think they will buy Bitcoin this year? Probably. I actually think they have enough momentum right now that I hope Lummis's bill gets passed. I think it's possible it does, or some version of it, maybe a watered down version of it. But yes, I think they will probably buy. That's just my guess. I don't have any insight though on whether. Obviously, I don't know how people are going to vote in Congress. Are any of the Bitcoin miners interesting? Will, I don't love public Bitcoin miners. In my fund, I have a couple names on my watch list: CleanSpark, Marathon, which I don't love that they're mining Caspa, but they have a ton of Bitcoin on their balance sheet, which I do like. And they're kind of pulling a sailor with their strategy, so that's why I keep them on. And then the WGMI, the Bitcoin mining ETF. They are all, however, in bearish mode. They have bearish momentum, so I don't own any of them currently. But if they turn bullish again, which I expect actually to happen in maybe the next month or so, then yes, I would buy some of these miners, and those are probably the ones I would buy. But don't follow me. I'm Mike Alfred, who I had on a few episodes ago. He is really good at Bitcoin miners, whether you love him or hate him. He knows his Bitcoin miners. So I would, look to people like him for mining tips. Great, thanks, Gwizmpet. You're welcome. Batman, hit the like button. Thanks, Batman. Appreciate you. Do I reckon Trump will crack and back off the tariffs because markets? I think he will back off soon. I think that's part of the. I think most of the bad news is already priced into the markets, and I think we're going to start seeing surprises to the upside, including surprises coming out of the White House. That they won't just be beating on the markets like they've been beating for the last 2 months. I don't like to make it too political. All I care about in the news and economic news, geopolitical news, is how does it affect my investments and how can I protect and grow my clients' money in my hedge fund. What are my thoughts on the 4-year cycle? It was faltering a little bit last week or 2 weeks ago when I did that bearish episode, but I'm kind of over that now. I think that was just this tantrum that we talked about, and that it's probably over with. I think that we're still on track for kind of the 4-year, and it's not the Bitcoin 4-year cycle. It's the global M2 monetary supply and debt refinancing cycle that drives the price of Bitcoin, I believe, and I think we're still on track with that. Thanks, Janny. Appreciate you being here. Please, that you actually take the time to watch. Bitcoin's CAGR for the next 10 years. It's so choppy, but on average, I'm for the next, so through like 2035, I think probably about like a 35% to 40% CAGR, somewhere in there, maybe 35, closer to 35. I think it continues to slow down over time, and that's just normal and natural. People get disappointed with that, by the way. And I just say, I literally, as a fund manager, look at all asset classes all around the world all the time. There's nothing even close to that, you guys. Stocks, if they're having, if they're doing well, they'll return about, 8 to 10%. NASDAQ stocks a little higher, other stocks a little lower. There's nothing that compares to this CAGR of Bitcoin, of the annualized rate of return. So just hold Bitcoin and the price will take care of itself. So, stack as much as you can while it's cheap. Someday, I tell my kids this, someday you'll be telling your kids, I say to my kids, so my grandkids, say someday you'll be telling your kids that you used to actually be able to buy for less than $100,000 per Bitcoin, and they're going to look at you like, oh, that's incredible. Ooh, ooh, ah. So anyways, I think this is going to be the story of our entire lifetimes until I die. Bitcoin is just going to keep moving up and to the right in fiat terms. Down and to the right is the better way to think about it in terms of life getting cheaper. Life will get cheaper year after year after year in Bitcoin terms, although there's some volatility, but that's kind of the guarantee of a scarce asset like Bitcoin. What's the common market missing about Bitcoin miner stocks? Jay, I touched on this a little bit. I don't think they're missing anything. I think mining stocks actually Bitcoin mining is a super, super capital intensive, dog eat dog, tough business. And so they will do well when Bitcoin spikes. So I expect Bitcoin to spike and I expect miners to also spike, but I do not view miners as a good long-term holding. They destroy shareholder value, I think, over time. So I only like them for bear markets, and if I can be frank, I like to short them in bear markets because they do not do well in a Bitcoin bear market. They do much worse than Bitcoin itself. I don't get that, Chad. Sorry, I'm reading too fast though. The socks. What are my thoughts from Thomas on Scott Bessent as Treasury Secretary? I like him as Treasury Secretary a lot. I think most people underestimate him. They think we talked about this at the beginning of the show. They think he's stupid. He is not stupid, you guys. He's so much smarter than pretty much anybody who's listening to him. He's doing what he's doing on purpose, and it's short-term pain, taking the credit card away, the fiscal stimulus away, forcing the US to run on a strong underlying economy for the first time in a long time. These guys are doing, you guys, what our representatives should have been doing for the last 40 years. So love them or hate them, I respect what they're doing. I respect the heck out of what they're doing because they're making the hard decisions and being temporarily unpopular to help make our economy stronger in the longer run. They're doing what, so I don't, and I'm not even political, you guys. Like, I hate politics, but I respect what they're doing. And I think Scott Bessent is smart. Do I think he understands Bitcoin? I don't. I listening to him talk, he sort of talks about it like crypto in general, and I can't stand it when you conflate those two terms. But he's surrounded by people who do. And so I think, having Lutnick next to him, even David Sachs, he's been surprising me to the upside. So I think they have a pro-Bitcoin squad and pro-Bitcoin advisors that I think are going to move them in the right direction. And as we talked about, is the way the executive order for the SBR and crypto stockpile are written, very bullish for Bitcoin, not bullish for crypto. How do I think Bitcoin plays a part and relates to my views as a Christian? That's great. So I always feel a little weird about this because I think honestly, Jesus doesn't care about Bitcoin, right? But I love it that it's fair money. It's just money. It's not money that that's incentivizes people to be snakes and salespeople and get close to the money printer like fiat currency does. It forces people to work with your hands, to contribute, to provide value. And if you do that, you will accumulate sats. You will accumulate Bitcoin, and that's fair. It's a proof of work-based system. So I love that. I get nervous about how many people blend it with Christianity because I actually see, and we've talked about this before, but I see people literally worshiping Bitcoin as a god, and that is heretical and horrible. So I hope nobody watching me here is doing that. Please don't. But I'm obviously a huge fan of Bitcoin as a monetary technology. I think it's very good for humanity and not great for centralized, huge nation-state governments. M asks, what is a reliable M2 to watch? Like I said, I use my poor man's version on TradingView. You can look at my screen to see what I do. There are much better forums, much better people you can subscribe to. I think the guy who does the best work, as I've said multiple times, is Michael Howell of Cross Border Capital. Lots of other places follow M2, and they're all slightly different, but basically the same. They're directionally the same. So that's why I use just TradingView, because it's cheap and easy. Thanks, Thomas. Appreciate you. Jay asks, is the Trump administration about to regulate U.S. stablecoins? I like Matt Odell, by the way. He calls stablecoins USD coins, which they should be. All they are is just dollar coins. Stable is they're. I mean, they have low volatility, but they decline in value over time. I think we're going to see regulation come out soon, and I think it will be beneficial for the U.S. dollar coin industry in general. And I would be careful with those because they're basically, I think, CBDCs in disguise. Save in Bitcoin, don't save in dollars or stable coins or US dollar coins. Did I see Jeff Snyder on what Bitcoin did? What do I think? I did. I like Jeff. I think he's really bright and he does a good job with lots of things. I think he's wrong about Bitcoin, obviously. He thinks you need to have an elastic amount of money, and I don't think you do to have a successful world and a growing economy. That's where we differ. Um, he's also kind of, I mean, I've been watching him for 3 years, 4 years, somewhere in there. He's been permanently bearish. He always likes to focus on bearish, which I like because I tend to lean optimistic, and he keeps me grounded with his bearish takes. And so he's right sometimes, but he's usually wrong. I think the problem I have with people like Jeff and other people, and I respect Jeff, by the way. I'm not hacking on him, is there are a lot of economists who give their spiel. You pay subscriptions for their services. All I care about is what are the investment implications. So what I'd love to see is like, what are your actual investment recommendations? And you don't, and I know he doesn't give public recommendations, I don't think, but like, what are you personally doing and how has that worked for you? And if you can't back up your economic and macroeconomic claims with investment results and long-term returns, then I would just say that you should double check to see if it's worthwhile. So hopefully that makes sense. If you can't get good investment advice from a macroeconomist, is it really worth listening to a macroeconomist? Today, me to that one with Joe Carlos, which was awesome. I said, is it time to buy bonds? I actually did buy bonds in my fund, and then they ended up hitting their stop loss the next week, and so I sold out the next Friday. So I don't have bonds in my fund anymore, just so you guys know. MicroStrategy's CAGR the next 10 to 20 years, no idea, but next 10 years, I would say slightly better than Bitcoin. Which main investors did you study to form your views, Thomas? I like, my favorite is Stan Druckenmiller. I jive with him. I want to be like him. I like it that he's kind of reclusive and he pops out about twice a year to talk, and he usually comes out at important inflection points. And that's kind of how I like to do it. I've actually given up. If you guys may have noticed, I've been turning down interviews because I don't like just saying the same thing over and over again. If I feel like there's something to say, I'll come out and say it. Otherwise, I'm just going to keep quiet. And that's how investing works too. You only make a couple decisions, throughout the year. You don't make decisions like sort of every day. You gotta give things time to play out. Hold on, let me check over. Okay. Let's see. Will asks, what is your signal to take profit at the end of this Bitcoin cycle? Well, my recommendation for everybody is to not think of Bitcoin as a trading vehicle, but as savings. So don't think about taking profits on your savings account. Just stack sats for as long as possible and as hard as possible. And over time, you will do well. And someday we can talk about the annuity phase of Bitcoin, when you've stacked enough so that you can actually live off of something like 5 to 8% of your Bitcoin stack. Is that a good time to start living off of your Bitcoin. But we won't talk about that today. You're welcome, Jay. Some say Tesla will, Dry says, some say Tesla will outperform Bitcoin the next 10 years. I don't think so. Although I like Tesla and I own it in my fund. Love or hate Elon, he knows how to run a good, a profitable company, profitable stock investment. Yeah, it was lagging. Sorry guys if there were issues with it. I lost my internet connection, so hopefully it's working now. Feather15 says you just joined. Am I still leaning bearish on Bitcoin? No, that's a short answer. You can go back and find out why. I'm very bullish, and so was the mastermind group as a whole. We all think this is a great time to be buying, and that the bull market hasn't even started yet, but it's about to. So please don't sit on the sidelines, but that's not individual investment advice. That's just what we think. Yes, I am in the house. I'm in Zurich, Minnesota. Rack, maybe. You're welcome, Brave New World. Oh, cool. Your pastor in San Diego, Feather, used to be an elder at my old church. That's cool. I'm getting close to the end here, guys, and then I was only going to go for 15 minutes, but I'm taking too long answering questions. What's your approach? Trying to tell people it's Bitcoin, not crypto. MN Minnesota Zoo Rack. That's what I've been doing for 5 years. That's why I was on Twitter for 5 years. That's why I used to go on to like the Swan, what do they call it? Cafe Bitcoin and these other things. Literally, I feel like all I've been doing for 5 years is trying to teach people that there is a difference between Bitcoin and crypto. That Bitcoin is international energy money, decentralized and secure. Crypto are basically, it's just nonsense, garbage. Even if it has some value, it has nothing to do with Bitcoin. Literally nothing relevant to do with Bitcoin. I know that people come back at me, but they're both cryptographically secure. I get that, right? None of those cryptos are gunning to be or ever will be or have even a tiny chance of being the world's international energy money. Only Bitcoin will do that. And that's a very super important purpose. And crypto is for there will always be degenerate gamblers and speculators and people who love to be entertained by things like NFTs, just like people used to own baseball cards and trade and stamps, and people go to Vegas and play the slots and all that kind of stuff. None of that has anything to do with Bitcoin. So I just keep telling people that over and over. And I think a good start, by the way, from a government perspective, is the SBR versus the Bitcoin or the crypto stockpile. It's showing that there is a difference between those two, and that was very encouraging. I gotta wind down here, guys. So many questions. I want to keep answering them. Do I sell or hedge? Personally, I don't do any of that. I just use Bitcoin as my savings, and I buy it at whatever price, and I sell when I need to pay bills, Eric. So that's what I recommend for people officially. I don't like talking about my trading strategies necessarily, but both. Well, I won't say anything. If you hedge to the downside, you still have to pay short-term taxes. It's taxes get you at some point, which is unfortunate. Kathy Woods economic. I like Kathy Woods updates. I haven't listened to her in months, but I generally like. She's sharp and she knows what she's talking about for the most part. They invest in some pretty stupid stuff at ARK, but when times are good, ARK does well, and I think we're coming up to another good time session here. So ARK will probably do well, and Kathy will become popular again for a while until the next bear market hits. TJ, how many TJ78492? How many times your salary do you think you need saved in Bitcoin Treasury? It's a personal decision for everybody. It totally depends on where you live and how much you spend. I like the 8% rule in general, so I think you should have at least, if you flip that on its head, and so like divide your expenses by 8%, that means you need about 12.5 times your say annual spending in terms of Bitcoin if you want to follow the 8% rule. However, with a huge caveat, Bitcoin is super volatile, right? It will backfire massively against you if you do this in a bull market. You want to do this at bear markets. So I tell people one of the easiest ways to do that is look at what the 200-week moving average price of Bitcoin is, right? Because that's sort of a lagging in here. I'll pop it up on my screen right now. And let me share this with you guys. Screen, window, share. Okay, so we're back to here again. So see this thick red line? That's the 200-week moving average. Right now, if you see where my pointer is, it's at $44,911. So assuming a price of Bitcoin at $44,911, could you live off of 8% of this per year based on whatever your stack of Bitcoin is? If not, I say keep stacking. And if so, then yeah, maybe you're getting to the point where you could start using that as a retirement, understanding that it's volatile and the value will fluctuate. So I think, you know, it depends when you take it out. I like, and this is getting really esoteric and granular. I like the idea of taking, so 8% annually, dividing it by 12 and doing it monthly, right? So 1/12 of 8% of your stack per month and taking some out monthly to live off of for retiree type people. I don't want to talk more about that because it varies greatly with people, but that's how I think about it. So good question. Do I put faith in chain analysis? New Brave World asks. Yeah, it's helpful. I look at probably 50 different types of things to make my decisions, and chain analysis is one of those things I look at, and there are some helpful things. Do I think we get diminishing volatility instead of diminishing returns going forward? I think we get both going forward. I think we'll have ever decreasing volatility and ever decreasing returns, but the returns will still be fantastic and they will still be skewed to the upside, and it will still make just simply saving in Bitcoin for as long as possible very beneficial. And I still think it outperforms other asset classes for a very long time, for probably at least the next 20 years or so. So it's one of them. It's the most no-brainer financial decision I've ever seen, but I could be wrong. And I'm going to stop there, you guys. Thanks for hanging in. Thanks for all the questions, you guys. I love this. Who knows when I'll do my next one. I don't like doing interviews that much, to be honest. I like conversations with people. I don't want to just be another Bitcoin interview guy. There's already, I think, too many of those. So we'll see. If I have something new to say, I'll come out and say it. Hope you guys are doing great. Keep stacking. Good times are coming, I think. And God bless you all. Thanks for spending some time with me today. All right, take it easy. And we are stopping. Yes.